Hello, this is Manesh Patel from Ichimoku Trade. Today is March 1st, 2016. Today in the video, what we're going to do is we're going to go for a market update. It's the beginning of the month, so what we want to do is we want to analyze both the long-term picture, the short-term picture too, and so forth. And we want to look at it across all different market classes out there. So let's begin and let's start going through the normal disclaimer. This disclaimer basically states this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, that you're doing at your own risk. All information is owned by EII Capital Group, and it cannot be copied or distributed without our written permission. We are broker neutral, but we have to show you a chart. So what we're going to do is we're going to show you eSignal from Interactive Data, and the reason why is you get a very global view with eSignal since it has all the data feeds for all the different countries of the world, including stocks, futures, fixed income assets, and stuff like that. Okay. Before we begin, I want to go through a inspiration quote. Here's a quote here for today. So basically, the quote for today is going to be: "The road to success is not straight. There's a curb called failure, a loop called confusion, speed bumps called friends, red lights called enemies, caution lights called families. You'll have flats called jobs, but if you have a spare called determination, an engine called perseveration, insurance called faith, and a driver called willpower, you will make it to a place called success." So pretty much that's our quote for today. Here's our contact details. If you have any questions, you could feel free to give us a call or send us an email, info@eiicapital.com. So let's go and straight go to the charts. Let's begin with the U.S. side. Let's look at the E-mini S&P 500 futures. Reason why we look at this, even though it's not the leading market right now on the U.S. side, the NASDAQ is still leading. We still want to sit there and look at the E-mini first. Reason why is all the institutions around the world look at the E-mini to judge the market. So that's kind of why we want to look at the E-minis. Now, what we're doing is we're focusing first on a quarterly picture. I understand some of you guys are day traders, but what I want to do is go from quarterly and drill down to the 4-hour time frame and kind of show you the different levels and spend some time on this one here. And the reason why is this is pretty much dictates exactly what's going on right now. So I want to make sure that we have everything very clear. If you look on the quarterly picture here and you look at the long-term picture, what's been going on since 1998, you could see that we've been easily consolidating between this range here and this range here, and that we've been consolidating for that for years. Then finally in about 2013, we broke out that consolidation pattern and we broke out to the top side. So we've had a huge run up here since basically the end of 2008, and we've gone up all the way from basically 7,682 all the way up here to this level up here. Okay, so sorry, that was 768 and gone all the way up to 2037. So this has been a huge movement up here. And you could see here in the Ichimoku, we have this red line here. This basically represents support for 9 bars. The green line here represents support for 26 bars. And you could see as the trend's been going up here, we've been respecting this 9-bar support here. Since it's a quarterly, this is 9-quarter bar support here. And we've been supporting it over and over and over. And you could see that sometimes we may bleed below it here, but we still pretty much at the end of the quarter close above it. And that's very critical because this is telling us the trend is still intact. The moment we close below that red line, now we basically are going to engage in a pullback. But we're really not going to engage in the long-term quarterly pullback until we close below that red line. Okay, and you could see that in March, we pretty much have done the same thing. Remember, the quarter is not over. The quarter will be over at the end of March. So at the end of March, where we close is going to be very critical. As long as we maintain closing above this red line here, we basically will continue to be bullish. Okay. If for chance we do close below there, then there's going to be high probability, believe it or not, I know a lot of people don't want to hear this, but a high probability to come back and retest this point here that we broke. So if we do go down into what we call recession numbers, where it's 28% loss or more, then we'll have a high probability of coming all the way down here to about 1540, where we could retrace down there. So that's the worst case scenario that you could see if we hit a recession or markets take a big trend downwards to the downside. Now let's go down to focus on the monthly. And the reason why this is critical too is this is kind of shorter. This kind of brings it into a 1 to 2 year forecast here. And you could see here in the 1 to 2 year forecast here, that price here, basically right here, broke out of the cloud. So the sentiment changed to be bullish in 2010. We came here, we held the top of the cloud here, and we maintained going up here. The key thing is that we've been holding this green line support here, which is the 26-month support here. And you could see that we've been holding it here. We haven't really closed below it yet. Last month, yesterday, believe it or not, we closed right at this level right here. We're off by a point, but that's pretty much right there. But we closed pretty much right at that same level here. In the previous month, we did the same thing. So January and February of this year, we pretty much have been closing right at that critical level here, and we have not engaged in that. The moment we close below this green line here, then we'll have a high probability of pulling back, and we could get into this cloud here. And you could see here the monthly was at least forecasting, if we close below that green line, to come down to about 1700 plus or so forth. Okay. However, we're holding that level here. As long as we maintain that level on a monthly basis, we do have a potential to go up. Okay. Now let's shrink down to the weekly time frame here. And let's look at the weekly time frame. And you can see the weekly time frame here, the sentiment's changed to being bearish. Okay. Now, once here you were bearish, it didn't follow through and break this pivot right here and start a trend to the downside. Again here, we retested that low right here, but we never sat there and retested the bottom side. And the reason why is that the monthly support has been keeping the weekly in check and stopping that weekly from going down. The moment we close below this level here, the weekly will start a bearish trend here, and the monthly will engage in a major pullback. And that's the critical level that we're looking at here, which is 1829, which we've got to sit there and go down. Now, even though we're consolidating right now, the top of the consolidation pattern, you can't really say is a top here. And the reason why is the pivot highs are going lower. Okay, so if you look at it here, the next pivot high that we're predicting that the markets can have a potential to go up to is going to be right here, is the 2046.50 level. So we're predicting that the markets will eventually, in the next couple of months, probably by April, go up to this level here, which is about 2046.50. At that point, hold this level here, and at that point start to go down. If it basically remains going into this consolidation pattern where the pivot highs are going lower and lower and lower, this will give us our next pivot high that's lower than the previous one, and that's kind of what we're calculating. Now, notice one thing. Once, twice, 3 times, 4 times, we basically tested this support. We believe that basically the way the markets are looking right now and the way the Ichimoku setups are taking place is that if we ever get to this level here and then come back to retest this low here another time, we believe on the next retest of that low, which we're predicting sometime to be in the summer going into October or so forth, we have a possibility of breaking that to venture down to getting down to the 1700 level or 1500 level. But there's a lot of things that have to go on before that even actually happens. And remember, even though that's our forecast, we're still looking for actions on a weekly basis, daily basis to support that. So that forecast can change based on what happens on a weekly basis, monthly basis, and so forth. Okay, let's go down to the daily time frame, kind of zoom in and what's going on there. And you could see here what's happening is that the sentiment is consolidating here, which is in the cloud. And you could see that there's a resistance here. The same daily resistance here is also the same resistance on the weekly time frame. Okay, we've held this resistance here. However, this resistance is not that. It's even though it's a weekly support, weekly resistance value. The problem comes down to is the swing trading time frames do not look at this as a major resistance at all. So there's still a high probability that we could break this level here. So be very careful. Even though this is basically a major resistance level on a daily, weekly, there's still a possibility of breaking that. As long as we maintain the support here, which is around 1885, then we still can have a possibility of breaking that support level there. Okay, and actually let's change that to be this level here, which is the short-term resistance level. So as long as we hold this resistance support level right here, we still have a high probability of breaking that resistance level right there. Let's go down to the swing trading time frame and let's confirm that too. Okay, so if you look here, whoops, give me 1 second. For some reason my charts are doing this. Okay, so if you look here on the 240 minute, we went a little below that to touch the cloud, but we still pretty much held this level here. We're holding the level here. So you could see the 4 hours basically supporting the daily short-term support, and the 4 hours trying to sit there and take price to get to this resistance level and break it. If it breaks this resistance level, then we're going to high probability coming here and breaking that. So right now, the 4 hours supporting this concept of breaking this daily and weekly resistance level here. So that basically is telling us this is bullish here. The other thing that's telling us bullish is that we also look at the VIX, the volatility index. Now remember, when you look at the volatility index, the VIX is an inverse relationship to the stock markets. Okay, so what that means is that if the VIX is going up, the stock markets are going down. If the VIX is going down, the stock markets are going up. Okay, and you could see here in the VIX, and this is something we've been talking about for 2 years now, we separated this out into 2 zones. The upper zone here, which is basically between 2074 and 3221, this is when the U.S. stock market's going to be basically going into a bearish trend on a swing trading time frames. If you're in the lower zone here, which is between 12.77 and 20.744, then this is basically the lower zone here, and this is basically where the U.S. stock market is basically in a bearish mode, bullish mode here. You could see here we entered here last week into this zone here, the bottom zone, which is basically making the stock market bullish as far as swing trading is concerned. And today we're holding this resistance level here, which is, yesterday we held this resistance level here. As long as we hold this resistance level here, and we also hold a support on the E-mini S&P 500 futures, both products are telling us that the markets will go up. So we are going to be basically short-term bullish as far as swing trading is concerned, to be bullish in the U.S. stock market as long as this resistance here on the VIX holds, and also the short-term support on the E-mini S&P 500 futures holds too. And what we're going to do is we're going to be basically playing this bullish until we get to an E-mini S&P 500 future resistance, or we get to this VIX value here, which is a support here. That's how we basically been playing the short-term price movement during this volatility that we've been having since pretty much summer of last year going into this year. It's worked really well, and we basically have been able to trade the markets on a weekly, monthly basis very successfully by doing it this way. Remember, we always look at not just the one product, but we look at a couple of products and look for things to kind of give us the same signal, and that tells us exactly which way our portfolio management should be going. Okay, so that basically is that right there. The other thing a lot of people are looking at, let's look at the dollar futures. And we're just going to look at a couple of other products too. The dollar futures here, a lot of people are bearish. Some people are bullish now, but majority of people are bearish. But if you look here, there's a major support right here that's holding the dollar futures here, which is in a consolidation pattern. And the other thing is that on the weekly time frame, this is above the cloud. So this is still, the sentiment's bullish, and this is, even though it's consolidating, it still has high probabilities more towards the bullish side since it's above the cloud than towards the bearish side. So here, this now has a high probability of retesting the top of the consolidation pattern, which is right there. And if it gets there very soon, then it could sit there and actually break that and go higher. If it gets there in about 4 or 5 weeks, then it'll probably bounce off there and come down. Reason why is momentum will be weak at that point. Okay, so that's the dollar futures there. The other one, let's look at gold and crude oil, which has been the biggest buzzwords out there. Here's gold here. The sentiment is changed here on the weekly time frame here, and you could see how strong this is. This here broke above the cloud, didn't even pull back to this yellow support at all, and is basically buying time right now to try to go higher. And you can see here that the weekly time frame is trying to set a trend to go higher. something is stopping it. So let's go to the monthly time frame and see what we could see, why it's being held in check right now and starting to go up. And you could see here that it also closed above here the monthly green line resistance level here, which is basically at 1217. So the monthly is being in check too. So believe it or not, we think that gold right now, if it's going to keep on going up, it's got a potential to coming all the way up here to this level here, if the lines will ever mark it, which would be the next level here, which would be right there, and at that point it could go for a pullback. So one of two things can happen. Either it's going to start going for a little pullback right now, it's not going to be a major one, it's going to be a minor one, and then what it could do is go for a minor pullback now, or this thing, believe it or not, could go straight shooting to this level here. So there's no telling what's going to happen here. Let's see if we could go down to a 240-minute time frame and kind of see what's going on here. On the 240-minute time frame here, this is bullish here, and you could see it being held here, and you could see here the support here on gold is going to be here. So as long as we maintain this support here at 1232, believe it or not, we got a high probability of breaking the top of the consolidation pattern and start breaking out to get to this next major resistance level, which is going to be at 1302. This is a critical support level for swing trading, and if you look at the daily time frame too, you'll see right here, this is the daily time frame here where the supports are coming up to that level right there. So this is there. So gold is very, very strong right now. I would not be going bearish on it at all. If you're bullish, I'll be very careful in entering a new position right now on a breakout level. I would basically be looking for it to maybe try to pull back if it can to this point right here. That way you could have a very short stop risk here, because there to the upside it could be limited because there's a lot of resistances to get to this magical resistance up there. The next one we're going to cover is crude oil. So let's go through and discuss crude oil now. Let's look at this from a higher perspective first and then drill down. Here's crude oil here. Let's clear up all the drawings here. Crude oil here, you could see here. And let's look at this on a monthly basis, kind of get a clean picture first. And you can see here, crude oil is still trending downwards here. However, there's some room for a pullback to this red line here. So if anything, if it could keep on going down to retest this low here, or based on the monthly, it can sit there and still pull back to this level here, 42.28, and still maintain this long-term bearish trend. Okay, so anything can happen between 25.97 and 42.28. So let's drill down lower and kind of get a little cleaner picture and get some short-term forecasts and stuff like that. So if you look here on the short-term forecast here, crude oil here is being held on a weekly time frame by this resistance level here, 38.57. So that's the level right now that this thing's holding right there. There's also another resistance level which is going to be roughly right there. So there's two resistance levels right there, 35.24, and it looks like since we closed here above there, looks like this week here we're going to try to get to at least 35.24, and then we'll have to see exactly what happens there. The major resistance level here, in order to hold the weekly down and still maintaining this bearish trend, is going to be 38.57. If it breaks this resistance level here, then it can go for a major pullback all the way to the cloud, but we have to wait and see. But this 38.57 is a major resistance level there, to a point we probably will be looking to short it there depending on how fast it gets to that level. If you look here, you could see here the 35.24, which is pretty much where price is trying to get to. So this looks like it's going to try to change sediments here, but there's going to be a resistance level here that's stopping it here. So if this is going to maintain this bearish trend, these two resistance levels are holding in check. The major one is 38.57. The minor one is going to be 38.524. So those are the two levels that we're looking for as far as crude oil is concerned. The other one, let's look at bonds, treasuries, and stuff like that. Let's look at this one. Let's look at this. This is their 10-year note, and let's look at this on a weekly basis first. And you could see here that this is basically bullish, but it is consolidating. And you could see that it had a chance here to try to break out here, but got in check, held in check as far as the closing price is concerned to be this level here. So notice it tried to go up here and then closed here. That's not a good sign for the bulls at all. So this, believe it or not, has a high probability of coming back and start going back into this consolidation pattern. So this is a consolidation pattern there. However, there's still a major support here at this level here. So the probabilities are high that basically this will sit there and come down to this support level here and hold it here and then try to sit there and come down. However, let's see if it could sit there and try to break that level there, that resistance level. So let's zoom down to a lower time frame, but the weekly is telling us it's consolidating. And you could see here that we got below the green line here, so this is trying to go through a pullback. So the probabilities are high, believe it or not, to get to the support level here. The question is how long it will take for that to happen. Okay, but basically we are consolidating between this range and that range, and now the probabilities are high to get to the support level right there. Okay, the other one I want to talk is the UK market, due to all the news of it separating out from the euro and stuff like that. So let's quickly look at this here, and you could see here that on the weekly time frame, this was bearish trending here on the weekly time frame, and what was being held, it was being held by this green line here on going down. It finally broke that green line here, and now it's trying to make a major move to get to this cloud. So it's engaging in a major pullback to get to that cloud. Let's look at the monthly time frame to kind of get a higher view here, and you could see here what happened on the monthly time frame here. So the monthly time frame, believe it or not, is in the cloud, so it's in a consolidation pattern. So the long-term picture is a big consolidation pattern here, and the whole reason why that weekly time frame stopped in entering a major bearish trend is due to the support here on the monthly time frame. Okay, so now let's go back to the weekly time frame, and you could see there's a high probability of getting to this resistance level here. So 63.10 is basically where we're projecting where it's going to go to. Now, one of two things can happen. It could be a smooth ride going up there, or it could be an ugly ride going up there. Nice little consolidation pattern that could go up there. Based on what we see right now with a chart pattern, we think it's going to be an ugly ride to get to that level there. So if you are bullish on the UK stock market, be very careful, because it's going to be an ugly ride going to that level right there. The next one we want to quickly check is going to be Germany, because that's the other one with the euro. And let's go to the monthly view, and you could see here that the German market was in a bullish trend, and now what's happening is it's engaging in basically a major pullback. So as long as it holds this resistance level right there, this, believe it or not, has a high probability of coming all the way down here to that level right there. So the German market is engaging in a major pullback to go down. It could either get to that level or get back to this level here for a major pullback, just depending on how long it's going to take. So if you really want to do a pairs trade, you can sit there and maybe look at going long the UK stock market and going bearish, basically the German stock market on a quarterly basis. I wouldn't do it long term. Reason why is long term, this is still above the cloud, whereas the British market is not in the cloud. It's it's not above the cloud, it's within the cloud. So for 1 quarter or so, you could go bullish on the British market and short the German market, but eventually what will happen is that the German market will sit there and start to go more bullish compared to the British market once it gets to its support level. Last one I want to discuss is China, the famous China market. A lot of people in the US side talk about it and what's going on with there. You could see here in the China market here, we had a huge movement up, and we basically coming down to the support level here and holding the support level there. Okay, now let's zoom down into the weekly time frame, and let's look at the weekly time frame here, and you could see what's going on here. And let me clear up the picture here. So a lot of people are saying, well, the Chinese market is stabilized. No, it hasn't. In fact, if you look at it here, next week the Chinese market's going to be in major trouble. The reason why is momentum right now is kind of weak, but next week momentum is going to be strong. And what's happening is slowly the indicators on Ichimoku are equalizing, and what's happening is that they've been equalizing during its consolidation pattern. Unfortunately, this consolidation pattern has not left its support at all, and it's kind of flirting around with the support. So there's time predictions right now, which we're looking at is possibility of China start there to break the support starting next week or the week after that. So be very careful and keep an eye on the Chinese market. And if you look at it here on a daily time frame, you could see that too. It had a chance to sit there and go to the cloud. It didn't do that at all. It came right back down here. So this is flirting around with trying to break the support level there. And let's go down even more into the 240 minute, and you could see it here. Okay, and you could see it here too. So be very careful on the Chinese market and what it's doing, and you could sit there and possibly go lower. So that's it for our update for today. Hopefully everyone enjoyed it. If you have any questions, you feel free to give us a call or give us an email here. We will be following up with more of these market updates as volatility enters the market. Thank you.